Hi everybody, this is Gary Dean, and this is our nightly video report for Tuesday, August 16th, 2016. So we did see some selling today, and the one thing that kind of caught my eye was the acceleration of selling towards the end of the day, and it's something that I've been kind of waiting for, because we have not seen it in a really, really long time. And it was really a wire-to-wire move to the downside, and it actually started on Friday. And if I zoom in a little bit, you can see what I'm talking about, where Friday made the new highs, closed, came back down, didn't close at the highs, and then we gapped down from there. So it was, one of those things where it is a topping pattern, but really you need to start seeing some of these support levels start to break. So really the first thing I would say is going to be right between that the 2075 and the 2070. If they break through that, then we're probably going to get the reaction trade down to the 2150, 2130 area. But the thing is that no matter, whether they're starting the big move down or they're just kind of consolidating for another pop up, we have to kind of wait and see. The pattern is not going to change even if they head up, because what will happen is this is just going to expand the move to the downside once this plays out. And these patterns they're pretty reliable. They're not. They're frustrating because you don't know exactly when they're going to play out the way they do. On the downside, a lot of times it's a lot easier than it is the upside, because the upside makes these kind of moves where it will touch the top of it and then come up and do a double touch. But you can see the lows, they come straight down, touch it, and then go up. So if that happens, I mean, it would be a massive, massive move to the downside. Probably hit this trend line and then come back up again. So there's going to be a bunch of trades, and as frustrating it is to kind of be short, it was we haven't really gone that much higher than where it is. It's more a time thing. That's the frustrating part of it. And, as far as price-wise, I mean, heck, even if it was going into the 12th or a little bit, you're talking 20, somewhere in the 2065 area. I mean, going 20 points or 30 points is not really a huge move compared to what we've been seeing. And when it does catch on and this thing really starts hitting, it's going to wipe this out in days. So this, to me, didn't really start. If we open up tomorrow and we have a big candle, then maybe things are starting to line up and where the bigger move is starting. Right now, I always just stay a little bit skeptical, because, they've been buying the dips all the time. So, until they don't, that's when I'll feel a little more comfortable with saying that this move to the downside started. But that's another thing that this pattern does, is that nobody's really going to be worried about this any kind of pullback until most likely we get below 2030, or say the 2115, 2130, 2115, which is now 60 points below that, and then they panic to the 200-day moving average, which would be at 2050, where then you'd probably get a bounce back up, but it's still going to wash everybody out. And it's after we get that bounce up, where this is where we kind of went down, we had a bounce up. No, this was down. Here's the bounce up, and then we cratered down. That's kind of going to be the same, the same type of pattern, except it's going to be bigger because of where we are on this pattern. So again, the one thing is, it's a pattern. This is not set in stone that this is going to play out. I've seen these work out a lot more than they haven't, especially when we have the bearish divergences. You have the rate of change that's been creeping down. Whenever all these start lining up, this pattern does work. And we also have sentiment that's on a one of the the most bullish readings for so long that I've ever seen. So everybody's just looking up, not down, and they all believe that nothing will happen to this market until until after the elections. And, typically when that happens, they don't panic until we start taking out support levels, and they all panic at the lows, and then we head back up again. So overall, this pattern is still in play, even if they have to move higher. If we take a look at the hourly chart, here's again that pattern just exaggerated, a little bit zoomed in. And another thing that supports this whole move is the wave count, where it's 1, 2, 3, 4, and we have, a wave 5. Now, maybe they need to extend this a little bit more. We'll wait and see, but most likely we'd come down to test these lows here, which is the 2046, which is the 50-point move to the downside, and we really haven't even seen that. So the bulls are not, they're not ready for any kind of pullback, because they've been very complacent and very lazy. They haven't had to defend anything. So right now, I would say that you have to keep an eye on that 2070, the moving average. If that breaks, then I'm anticipating 2046 to the 2020 area to come into play in a pretty quick manner. Again, we have the bearish divergences on everything very still. We just came off of the overbought levels. There's plenty of room to get into the oversold. And if we just take the last look at the 15-minute, you can see they broke through this wedge. I don't really go crazy clapping my hands on it, because I've seen them break it before and only to come running back up. But they did break this bearish wedge, and that was on top of bearish divergences. And right now, again, that I would keep I think the bears need to push it through this 2070 level. If they do that, then 2065 will be where we may find some buyers. It's not really guaranteed, because the thing is that the pattern is actually looking for us to go a lot lower than these levels here. So let's see what plays out tomorrow. Enjoy the rest of your night, and I'll talk to you in the morning.